This video is done by Divergence Analysis, and this tutorial is on DVAN Long Term Trend, which is available at one of our studies, available on the Bloomberg app portal. I'm going to start from the bottom. This is the macro algorithm. This is the algorithm. This is baseline. And this is intended to show you the long aggregate trend. Again, this is taken from our velocity algorithms, our velocity methodology, and we use no price inputs in any of our algorithms. So this is, even pullbacks like this, they come back and they don't break. You only see the macro algorithm break right here where the market is in a little jeopardy. And then it comes right back up here telling you that no, you're going back up again. So and this is on Google Daily. And then the trending part are these little circles, green circles at the top of the price bar or red circles at the bottom of the price bar. What this indicates is when Google is trending. Okay, so it's trending, pulls back, and this would be pulling back into neutral. But we want to look, I'll use the tracking. We want to look at every time we pull back into neutral or quit trending, we want to look at our algorithm and see what is it telling us here. It's telling us that there's no bigger break, so we're just pulling back toward neutral. And then it starts trending upward again. It stops trending right here. This actually tells us that we're at neutral and we're leaning negative. Okay, that's what the orange area is, down arrow. These spotlight when you're right at the neutral point, and this is another algorithm. This is our differential algorithm that defines where trending periods begin and end. So this is at neutral, leaning negative. You see it pull down a little bit, but we get no break of our macro algorithm at this point. So as soon as it turns back up, and then we get another neutral but positive indication, and then we start trending again, and this stays in an uptrend for a long period of time. Here we are back in neutral again, leaning a little negative, so you expect prices to keep pulling in a little bit, and they do. And then we look here, and when we start getting more negative here, we're looking for it to pull back a little more because it's below our algorithm base. Okay, it doesn't really break it and keep going down. It sort of parallels but underneath. And these trending, downtrending markers, red circles, tell us that prices are still, negative, have been a bias. Now we see the algorithm coming back up above its base, and we see the trending algorithm up here go back to neutral and a positive lean. Okay, so now we're back into an uptrend again and seeing it trend all the way up to right here. So this is designed to keep you in the longer trend. You can use this on a daily. You can even use this on an intraday chart if you want to be more of a patient intraday. And I'm specifically pointing to the trending dots, trending upward and trending down. So if you're in an intraday period where you're getting a good forceful move, you would stay in it until approximately right here, and then you would go out and say it's not trending anymore, I'm going to take my profit. You can also use this on weekly to get a really huge macro look at the markets or any individual stock and see where the algorithm is. Is it still in a real big uptrend and everything? And then you can go to the price markers and see exactly where it's trending and resting, and it's starting to trend again. Okay, so this is a really good long-term look at whatever index or asset you're looking at.